Hi, welcome to the Market Alert for Friday, the 5th of May 2023. So May the 4th be with you. The shorts, regional banks, rout Sparks bond and bullion bid. That was during yesterday. Soaring recession risk push rate cut expectations to July. So we'll see if they do cut it in July. US stocks were lower as banking sector woes continued to drag the market down. And risk off sustains on more bank woes and mixed ECB ahead of today's NFP numbers, which was what I was coming to next. Today is NFP day, and we're looking at 181,000 new jobs, 236,000 previously. I don't know how the market's going to react to this because of everything else that's going on as well. The potential for, as we just saw, a cut in July. I very much doubt that. And of course, if the number comes out greater than 181,000, then the job market isn't slowing down. So I suppose that's the only thing that I could say about this, is just to watch that 181,000. But as we know from previous, with these numbers, they get released, they come out higher than forecast, and then within half an hour, they're actually adjusted to make them look actually better. Then they run the market back to the upside. So again, it's being aware of all of these things that go on in the market. So 181,000 is the forecasted figure there. So we'll just have to wait and see at 1:30. Let's have a look at the implied volatility whilst here. Normally we do it the other way around, but while I'm looking at it, we've got this increasing. As I said the other day, 1244 put us into potential corrections, and we're seeing this moving down now over the last few days, up at 1615. Before this market could potentially bottom out, this would have to go to 2425 in order to see a potential bottom. But we'll just have to wait and see what happens with those numbers today. So at the moment, panning out with the implied volatility being the precursor to this current correction that we're seeing in the markets. Okay, talking of corrections, let's have a look at the Dow and work our way through the markets until we get to the metals, and we'll kick off with the Dow. So yesterday, markets lower, as you can see they're down 50% retracement from here up to here. We've got demand, the market finding a bit of support overnight there. This is the day after the Fed raised rates by a quarter of a point. So we need to take out the high of yesterday and then work our way through these numbers. But notice also just at the high, we've got the 50 EMA and the 5-bar moving average. So 33,440 will take some serious buying to get through that area in the daily chart. In the 30-minute chart, so the market was stuck in a 150-point range, drifted down to 200, and then moved sharply lower when the Dow opened. Again, these regional banks are seeing a lot of money being taken out, and the market eventually managing to come back. And then overnight, it's very quiet at the moment, and I suspect that the morning session will be too, as it waits for those NFP numbers. You can see there we need to get back above the DP for the Dow in order to move back to get anywhere close to yesterday's high, which is sitting up here. So at the moment we're in the mid-range of the high and low of yesterday. And in the German DAX, second consecutive day of demand, an even bigger bar. Market wouldn't go down yesterday. It had an attempt to move lower but failed to do so. These are the upside targets for today, where the market generally does move higher following the NFP numbers. As I say, they come out and adjust the numbers half an hour later, and then everything is fine for the open of the Dow at 230, and they move the market back to the upside. It would have to be pretty high, but somewhere in the region of 300,000 to actually send the market to the downside without any sort of recovery. In the 30-minute Dow for yesterday, we sold off initially. As I said in yesterday's alert, we would get a sell-off, then we bring it back. Market didn't hold. We came back to the low, but the low held beautifully, came back and retested at 89, and then moved back to the upside for the remainder of the session. In the 5-minute chart, there's your shakeout, the classic. We had this the day before, which is why I mentioned it in yesterday's alert, so you'll see the same thing there, not as dramatic. Of course, we've got the rate increase and also the regional bank Woes of PAC West, and there you can see down to the low, market came straight off the low up to the 200 MA, then back down, making its way, bouncing off the averages back to the low, and then also, as you can see there, coming back to the low once more in the afternoon, and then making its way and actually getting through the 200 MA late on in the afternoon. Overnight, the market sideways, but well above the DP, unlike the Dow, and the high is just above here at 15,827. It's already in the gun sights, as you can see there. Let's have a look at some trades for this week. So for this week, we've got £552.50p. We've got 661 gross. We've got a profit factor of 609. We've got 83 to 17 win-loss ratio. So not been a bad week so far when he started on Tuesday. And then, of course, today we've got the news, which will create a bit more volatility as well, and some trading opportunities. So again, we're going to have to wait and see at 1:30, but I suspect it's going to be quite volatile. In the S&P, also trading down to, well, actually traded down to 100% yesterday, but managed to get back above 89, being picked up at this low where we saw the market rally before. Will it have the momentum to get back above today, above that 50 EMA and the 5-bar moving average, also at the high of yesterday? If it does, then these are the upside targets, and failing to do that, you've got downside targets here. We'll just drag these out so you can see them there. So you've got all of these on the downside there. Interestingly enough, 62 is just below here as well. 30-minute S&P, you can see yesterday down really, the odd green bar until the afternoon when it was retested down here, and then they managed to bring the market back currently above the DP. In the FTSE 100, also down to the 78 with demand. A lot of buying yesterday ahead of these NFP numbers, and or absorption of selling is probably more the case. And again, you've got resistance at the 50 and the 5 MA, which ties in with the 38 at 7768 there. 30-minute FTSE, again, down day, trading down to the S1, failed to hold at the low once it broke it. It came off it twice, but then went down to the BRN, which is at 7,700, I think, yeah. And this was retested before they moved the market back up, and also above the DP with the high at 7781 just there. And in the currencies, GBP JPY down at around the 62% retracement with the 20-bar moving average for support. Failed to move up yesterday, so let's just remove these. So put in some new ones because we didn't move up yesterday. So that would be the upside targets should this move higher during the release of the NFP numbers. There you can see very quiet, waiting for those NFP numbers, but then selling off as the Dow moved lower on the open of yesterday, but sitting above the close and DP with the high just above there, just 50-60 points above that level. In the pound, continues to move to the upside, and if we look at the 30-minute chart, it was choppy yesterday, and the move really, the smoothness of the move and the trend has been made overnight with far less traders in the Asian session there, so the market through the high, as can be seen there. In the dollar index, we can see this is down on the overnight. We're coming down towards that 89. If we take this out today, then we can expect quite a significant fall in the dollar, which is only going to aid in moving the metals markets to the upside, which we'll have a look at now. And here in silver, we managed to move up yesterday. We actually got through the 26 dollar level. I mean, whoopee. But we've got resistance at 26.77. Sorry, 26.07, which is $26.07 in this market. But let's have a look at the 30-minute. You can see overnight we tried to stay above this level, but it got sold into, and now we're back below the $26. Still, 40% less than 1979 and 2011, but you can only hope that one day we'll be allowed to move up. And at the moment we're above the DP, but this market's certainly waiting, along with the gold market, which you can see here, for the NFP numbers. 30-minute chart of gold. You can see having moved up, but not taken out the all-time high, which we'll just have a quick look at here, which is 20.78 and 42 cents, which is the new all-time high for the gold market. Just a shame that silver's nowhere near, like I say, 40% off the highs of 1979 and 2011. Quick look at the gold-silver ratio before we finish off. So yesterday, silver outperforming percentage-wise again the gold market. So you can see this with the ratio dropping down to 78.80, where it's currently trading there. So silver certainly showing a far better return than gold, which it would do because obviously it's a lot cheaper. But this confirmed by the gold-silver ratio there. Okay, that will do it for this one. Let's see what happens at 1:30. And fingers crossed it's not just a non-event and it comes out at 181,000, but who knows. Okay, have a great weekend. It's another bank holiday weekend, so I'll see you on Tuesday, and enjoy it. And also enjoy the break. So with that, like I say, keep an eye out for the NFP numbers. And as ever, thanks for watching. See you in the next one.